I woke last night from a terrible dream. Total terror, total panic. I thought my kids weren't safe. I thought my finances weren't safe. I thought I was dying. I thought it was the end of the world. I had been completely consumed with the news cycle and talking about the news cycle of all the terrible things that are happening right now. And it literally woke me up with night terrors. It is certainly not my intent to create fear porn or anything like that, but the fact that we are at an escalated risk, at least the biggest risk in my lifetime, to global nuclear war and economic collapse and financial ruin and housing market risk and real estate portfolio investment risk, I think all of it hit me at once. I really felt the fear of, are my parents safe? Are they going to be okay? Do they have enough money to live and thrive? Are my kids going to grow up in a world where they have the freedoms that I did? Am I financially prepared? Are my investments safe? Are my finances safe? Will my purchasing power be worth anything in the future? Will the dollar be worth anything in the future? Will my business be worth anything in the future? Are we really about to experience the biggest housing market and economic crash in American history? And honestly, then my heart started racing and I asked myself, am I dying? Or was it simply just a bad dream and when I wake up in the morning, I'm going to be fine? Well, spoiler alert, here I am, I'm fine. And the biggest crisis that I have this morning is, do I have a cold brew coffee? And thankfully I do, because I desperately need some caffeine. But I felt compelled to share a video because there are so many things that are happening right now, and many of these things I've talked about before, but I'm looking at them through a different lens and I want to share it with you. And I have a secret to share with you guys. I don't get out much. Truthfully, I am hyper-focused on certain things, but really getting myself out there in the real world, outside of the real estate space, outside of the family space, outside of my comfort zone, I don't typically put myself out there, and I typically don't go out and socialize much. But recently, I started leaning in a little bit more, and I started to experience some new things, and I felt compelled to share them with you. Because of the work I do and the content I create, I can become blinded and my mind can become hijacked by the vicious news cycle and the fear and uncertainty that is essentially mainlined into our bloodstream by the media today. But volatility season is here, my friends. But last night I went out with some friends. I went down to Atlantic Avenue. I went down to Delray Beach, and I had a fantastic time at Throw Social, experiencing live music, hanging out with friends, unfortunately watching the Hurricanes lose to Florida State. And while this place had all kinds of fun stuff to do, there was axe throwing, there was beer pong, there were cabanas, and there was a heck of a lot of pretty people enjoying themselves. And while that might not seem like breaking news, and you might not think it's particularly relevant to the housing market or the economic conditions that we're experiencing right now, but if you think that, I would respectfully disagree. Now, truthfully, it's been a minute since I've been down late at night to downtown Delray Beach or hung out on Atlantic Avenue. I don't typically stay out late these days, and I tapped out early last night. I left probably around 8 o'clock at night, but at 8 o'clock, it was just starting to go off. And I guess that makes me a senior citizen, and I probably qualify for the early bird special, but I had a blast, I had my fill, I was ready to go, and I had other things to take care of. And if you've ever been down to Delray Beach or Atlantic Avenue at night, you know how insanely packed that it gets. And I, unfortunately, forgot about that. And I couldn't help but notice and remember how insanely crowded it gets. It reminded me of Times Square back when Times Square was Times Square. There was just an endless sea of people walking the streets, going in and out of restaurants, spending a lot of money. Everybody was dressed to the nines. Very pretty people, gorgeous women, handsome men, everybody done up. everybody flexing financially, I saw more Lamborghinis and exotic cars on my way home than I have in a long time. And the only reason I'm sharing this is because it clearly demonstrates the difference between the haves and the have-nots. And I think it also demonstrates the difference and variance of markets that exist within Florida. And I can promise you there were not too many folks that took offense to the fact that the drinks were probably 300% more expensive on Delray Beach at most of these bars and restaurants than they would be some other place. Nobody cares. They want what they want when they want it, and they are happy to pay a premium to have a good time. And there were lots of folks having a good time. And yet, every time I've walked into Target over the course of the last year, the store has been predominantly empty. And anytime I've walked into a Walmart over the course of essentially the last year, the store has been predominantly empty. And truthfully, I'd rather put a gun to my head than go to a shopping mall these days. But anytime I've gone to an actual shopping mall over the course of the last year, the mall has been predominantly empty. And while there are many analysts and financial prognosticators that would want you to believe that the economy and all markets are going to fail because the consumer is dead and drowning in debt and totally broke, waiting for the next round of stimulus in order to spend money, downtown Delray Beach was in fuego on fire last night, with everyone spending money hand over fist. I mean, the ante is parking if you didn't take an Uber, but parking my vehicle in downtown Delray Beach in front of Throw Social yesterday was $30. And if you've got $30, it's not a big deal. And if you don't, it's a huge deal. But people are willing to pay a premium to experience Delray, and yet Target, Walmart, and most malls look like they're going out of business. And a lot of folks think the government and the economy and the United States is about to go out of business too. And if you've been watching for a while, you know that I believe that the economic picture is distorted. I believe that many of the metrics in the data that they show is manipulated. But what I think and what the market thinks and what the consumer thinks and what the voting public thinks are two different things. And I think we're going to have to accept the unfortunate reality. But when it comes time to vote in November, the economy is likely to look as if it's in reasonable shape. And I know that that reasonable shape can be revised over time. All the predictive models that exist out there right now point to the fact that it will likely look like it's in reasonable shape, which means that on paper, Biden's economy is going to look okay to a lot of folks. And when I woke up last night in the panic with the night terrors, I also knew that if I didn't get into action and do something to occupy my mind, I'd probably continue to spin in this endless cycle of fear. So I went and did a little bit of research, I got into action, and I found some charts that I want to share with you. And if you look at the slide of the money supply, you can't help but notice how much the money supply has shrunk recently. And you've got to keep in mind that there are two major forces that are opposing each other in this chart. And the first factor or the first force that we must be aware of is that there are huge deficits that exist right now. And we're still issuing a lot of money. And on the other side of that, we've got QT. We've got quantitative tightening. But what this chart clearly shows is that the money supply is clearly shrinking, or at least starting to shrink, and is no bueno for financial assets. It's a great thing in terms of combating inflation. The shrinking of the money supply absolutely impacts inflation in a positive way. It brings it down, which brings me to chart number 2. And what you can see is that prices are coming down, which demonstrates that we're getting to a better place with inflation. And the leading markets price that in real time. Now, many of you know I was a stockbroker for 20 years, And I feel a fiduciary responsibility to share what I see and some of this analysis in real time so that you can make the best decisions for yourself, for your family, and for your financial bottom line if you're thinking about buying real estate. But financial markets, which are leading markets, leading economic indicators, they have priced these changes in. These changes already are in the bag. But what's absolutely not accounted for in any of these metrics thus far are the lagging markets. And there are a major handful of lagging markets that are not shown on this chart. Specifically, rents, housing, and real estate. None of that is accounted for in these charts or in any of the financial market models because they're lagging and they are very, very slow to show up in any economic data. And when you roll them into these inflation rates, it points to the obvious fact, the obvious reality that they're going to roll over. And when they do, they're going to do so very quickly. Which brings me to slide number 3. And this was the chart that created massive panic. It triggered the panic alarm from many economists, many financial prognosticators, many analysts out there. This was the chart that scared the living bejesus out of everyone. And now hindsight is 2020. But back in November of 2021, this chart pointed to the system breaking. Something about to fail, something about to break, and yet nothing broke. But right now, the 10-year break-evens are telling us that we're likely to be in a pretty decent place come election season. Now, if you've been watching for a while, you know that I've shared cash seeks its highest value, and there's a massive amount of money. Financial institutions are sitting on the sideline with boatloads of cash. But anybody can tell you whatever they want to tell you. Is there data to demonstrate that it's true? And what you can see on this slide is this staggering amount of money sitting on the sidelines in money market funds. $6 trillion and growing. Sitting on the sidelines, waiting to be redeployed into whatever asset class is going to provide the most yield. That money, and again, that's just a snapshot and that number will change, and it only accounts for our economy. It certainly does not account for every other country that is also sitting in a similar position, but it does demonstrate the fact that there is a tremendous amount of liquidity sitting on the sidelines looking for a home. And although it's November and it's not 2024 yet, right now is the beginning of the fiscal year for the entire mutual fund industry, which is a leading indicator that fiscal markets are set up to do quite well in the near term. But they are certainly going to want you to believe that inflation is in the rearview mirror and that the economy looks like it's set up for a soft landing. But I know there will be shocks to the system, and I know there absolutely will be election volatility because we're entering into volatility season. And commercial office space is about to get smashed. And I should probably restate that. It's going to continue to get smashed, but much worse. But fundamentally, real estate and the housing market is correlated with interest rates. But the 10-year treasury, I think, is somewhere around 4.5. If it goes to 6, the real estate market and the housing market will be repriced. But if it settles in here at 4.5 or 5, it stabilizes. But does that really help the consumer? Does that really help someone who's looking to buy a home now? Or does it really help the institutions? Because real estate and the housing market has largely become institutionalized. And when I say institutionalized, yes, I'm talking about the same folks who want you to own nothing and rent forever. But the liquidity that I pointed to earlier with those trillions of dollars of money sitting on the sidelines, which mainly is institutional, are going to redeploy their money into whatever provides the best yield and provides a hedge against inflation. And real estate is far and away the best asset class. But just like I woke up in the middle of the night with night terrors, there are many folks out there right now that are uncertain as to what to do next. Because buyers don't know what the interest rates are going to be. Investors don't know what the cap rates are going to be. And nobody knows what the economy is really going to do or what the growth is likely to be moving forward. And I don't pretend to be an analyst or an economist or a financial advisor in any way, shape, or form. Nobody knows what's going to happen next. But I do know demand is down. Supply is down. Disruption is inevitable, and banks are likely to be recapitalized soon. And the markets will trade, the sun will rise, life will go on, and we will continue to max out the opportunity that each day provides. Unless, of course, someone launches a nuclear war, in which case we're all dead.